National Insurance Clearinghouse, the marketing arm of Brokers Alliance, presents a Bravo video event, the Business Insurance Zone, dedicated to financial professionals who use insurance in their practice. And today, what every producer should know about taxes with special guest Ken Davis, CPA. And now the host of the Business Insurance Zone, the whiz of the biz, insurance columnist Steve Savant. Well, welcome everyone to the Business Insurance Zone. We're broadcasting live to a nationwide audience of financial professionals right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today and returning again for another week of taxation fascination is Ken Davis, CLU, ChFC, CFP, and CPA, and I'm not kidding. Welcome back.
Hello,
to the
Stephen.
show.
Good to see you again.
Back, boy, I tell you what, last week we did Section 79.
Yeah.
And you love that, and of course we're all over that. Today we're talking about everything our producers want to know about taxes. Well, I can tell you right now, as a producer, I don't want to pay taxes at all, but that's not the world I live in. I live in the reality of taxes, and I just wanted to bring up one thing that we have right up front for the show on a giveaway. And our good people at AXA, one of our best carriers, they have this 1040 overlay. It is so excellent. I have to tell you, if you want to order your free one, just write us www.brokersalliance.com. You can go to our website or go ahead to our email of the show, thebiz@brokersalliance.com. And if you call us at 1-800-290-7226 extension 147, we'll send that for everybody that wants to call in. It's got a great laminated overlay, and I have a good amount, so I could probably go through a lot of calls. This is excellent. This will actually position you. We'll get into this more.
Yeah,
this will actually position you and how to actually sell products off this 1040 overlay.
Well, there's a tremendous amount of information on a tax return, including dependents, that can help you identify the needs of the client. So, yeah, it's excellent.
You know, the thing we're always looking at, Ken, is I'm trying to say, wow, we're talking about specifically about taxes, but we're doing it only as taxes relate to the sales of products that we sell.
Right.
Now, that could be life insurance, could be annuities. Some forms of LTC may have some tax advantages that we've talked about in the past. Even some ideas that may be with DI because there's some deductible issues for businesses and stuff like that.
That's true.
So we're going to go through a few of these items, but that's the only reason we're talking about, because normally, who wants to talk about taxes? That's in the CPA domain.
Yeah. Well, and qualified plans, IRA, stuff like that are
Exactly.
all tax vehicles that can utilize annuities, and profit sharing plans we'll talk about later can even do life insurance.
Well, when we get into it today, we're looking at so much out there, and we have a crib sheet, another giveaway that we're going to give away right now. This is an excellent crib sheet put out by one of our premier providers, Lincoln Benefit Life, and it is an excellent summary sheet of 2012 taxation.
Well, and let me just point out, there's a whole lot of confusion on what's happening in taxes because as Congress is jockeying in an election year, they keep doing the sunset thing, and they extend it for a little bit, and they give you these bennies, and then it's going to be interesting to see what happens after this election is over in 2013. I really think there's going to be major changes at that point, and in the meantime, things are coming and going fairly rapidly, so it's a very unstable environment. So having a sheet like this shows what 2011 was, what 2012 tax rates are, and then what some of the changes are. I found it useful for myself to see it.
It's a great summary sheet. You can get it on LBL's site, but if you don't want to go to Lincoln Benefit site and you want to just request it from us, again, just write the show, thebiz@brokersalliance.com, and say, Steve, I want Lincoln Benefits 2012 tax guide. Excellent piece of material. I'm sure they're going to have this out. We have a little window of, hey, exclusivity. We got it out before everybody else.
Yeah.
I also did a pilgrimage again. It was a sad pilgrimage, I have to say. I went out to the site this morning before we started recording the show to look at the U.S. debt clock. And if you haven't been out there, we are sitting at, and this is at this morning, these numbers are changed. Think about this.
They've already changed.
The numbers are changing every $35,000 or something like that a second.
Yeah, amazing.
A second. I mean, wow. I mean, it's just going up. So every
I want that job. Earn $35,000 a second.
Well, I'm sure the government is making that. I'm sure that we're looking at 15.3 trillion with a T in debt. And check this out. And it's not that I want to get political on the business insurance zone. We all know that. I'm just talking about math here.
Well, the fact of the matter is, both kinds of administration, whether it's Republican or Democrat, have been involved in building this debt. So that we're not pointing the finger at either one of the administrations.
That's correct. Actually, I'm pointing the finger at the whole lot of them.
Yeah.
Right. I mean,
Yeah.
and
I don't know, man. I might have to go libertarian when this is all said and done. I don't know. We'll have to see. But I'm looking at these numbers, Ken, and this is what disturbs me. If we divided the almost $3 trillion of debt that we have, each citizen owes almost $48,000.
That includes like two-year-old babies.
Everybody,
they're
all
citizens,
in.
right?
However, not everybody in the United States pays ordinary income tax, right?
Right.
So if I only saddle the tax-paying people who do this, they owe $135,000.
Oh my goodness.
Now, I just want to bring this up. They talk about the top 1%, right? Paying the 37% of this. And remember, there are people, half the country is not paying tax. Almost half the country is not paying taxes.
Well, and it'll become evident as we go through here. We're going to be talking about adjusted gross income limitations on deductions, credits, and exemptions, things like that. And it's going to become very clear that it's not the wealthy that are being limited here. I mean, these are not only middle class, sometimes lower end middle class people that are having tax benefits scaled back because they make too much money. So, we're going to demystify that a little bit.
Well, I'm into decoding, demystifying, and deciphering. I want to do it all on the show today because this will position our product line really as quite interesting.
That's
when you
right.
think about this. I mean,
it has an impact.
We're not doing this because we want to impress the CPA Society, although I have to say, Ken, I think they're already impressed. We both teach there.
Yeah.
But we're really trying to give our producers a leg up on what's going on in taxation and how much we can save our clients legitimate taxes through the products we sell.
Yeah, it's interesting the fact that CPAs want to be educated by us. I actually put on a program last Friday, and I had a CPA, a couple of attorneys, and a couple of bankers, and we spent 7 hours talking about life insurance. Can you believe that? And they were really thankful for the information because they want to know how this stuff works because their clients are interested.
Well, listen, last year, we went to the Thunderbird School of Global Management, and the two largest seminars, Ken, were Captive 831Bs and non-MEC VUL offshore. I mean, think about that.
And I'm not sure our viewers understand what that means. Thunderbird is probably one of the premier international business schools
Top
in
of
the
line,
world.
in the world.
Well, much better known outside the U.S. or even Arizona than here. And the fact matters, the people that came to that thing were ultra wealthy people.
Oh my gosh, I sat next to everybody was at like 60, 80 million around our table.
Yeah, not high net worth, ultra.
So when we talk about the things we're talking about today, we're trying to give you the heads up. I wish we could do the whole code. I know that's what you're I know Ken wishes we could do the whole code. Although I had to rein Ken in because I know if we did the whole code, we'd need about a couple months. Actually,
you'd need years.
Years, because I saw the paperwork on the code. It looked greater than the biggest directory I've ever seen out of New York from the telephone company.
Well, the code's like this thick, and there's actually guys, tax accountants, or attorneys, lawyers, that may look at 3 or 4 pages and make a whole lifetime out of learning what those are, looking at regulations, court cases, rulings. I mean, it's just as geeky as it gets.
Well, speaking of geekendom, and of course,
geekendom.
That's why I have you on. Geek of the income taxing. Ken, just a heads up, because I think sometimes we get mixed up here, and we're going to get into AGI. There's another mix-up issue. We have regular tax rulings. Regular plain old IRS parts of the code that we're going to be talking about today. Then you have little TAM rulings, right? These amendments that they do, right? And PLRs.
Well,
there's a lot of little things going on that we always talk about in our industry.
Well, yeah, basically there's the code itself. Then the Treasury Department actually does Treasury regulations, and those are your two primary sources of authority. And then the IRS, the Treasury will do revenue rulings, public revenue rulings, and then they do private revenue rulings that are specific only to a particular taxpayer that requests them, and it's their specific facts, and the IRS isn't quite ready to release that to the whole world, so they go through different process of review, and like you said, TAMs and revenue procedures, and then there's court cases and all kinds of stuff. So yeah, the body of tax law is not just the law itself, it's all the interpretations that go along.
And it's really interesting because we have a document that's out there. Again, just write us the biz at brokersalliance.com, and we'll send it to you requesting just our basic, it's a great digest of taxation issues that are pretty, it's still 100-something pages long. I'm not going to kid you, it's long, but it's a lot easier than reading the code or calling somebody up who you want to talk to about it, and they're going to be sitting there trying to find out the specific areas that touch our business.
It's interesting. When I went online a little bit, do some research for the show today, a lot of the articles on taxes were done for year-end tax planning. And it's interesting with all the changes that are going on, there just isn't that many articles out there that have actually caught up with what's happening in 2012. And both this tax update summary sheet, which is just 2 pages and is really quite excellent, and the other reports that we put together have been updated for the 2012 information, so it's a great place for people to quickly come up to speed.
Well, on this very thing you're alluding to, I'm looking at the 2012 tax update by Lincoln Benefits summary sheet here. It's really excellent. And the first thing that, before I get into all these cool things we want to talk about, everything seems to be based on these 3 letters, AGI. Right?
Yeah, and that's not AIG, that's AGI.
AGI, okay. Ooh, nice pun.
It's worse than AIG.
I just want to know, all my friends, he said that, I did. Okay.
You're rubbing off on me. I'm not sure that's good, but
no, it's not. We have to have somebody here that has a quality of some bit of sanity and sobriety. Ken, AGI, the most misunderstood number. I think a lot of our producers, I mean, we all have to pay taxes. We're all, doing 1040s, but AGI, talk a little bit about that.
Well, to follow along, all you have to do is pick up the Form 1040, page 1. I know everybody's going to rush out and do that. But on the bottom of it is the very last number is the adjusted gross income. And so you start at gross income, you add in all your income items, and then there's some adjustments along the way, like IRA deductions and stuff like that. And finally we get down, and other business deductions, we finally get down to the bottom of the page, and that's adjusted gross income. That's before itemized deductions, okay, and exemptions. So why that's important is there's all kinds of credits, deductions, and exemptions, and other things within the rules that determine, adjusted gross income determines whether you get to benefit from those or not. The whole idea is that as you make more and more income, the tax law phases out the ability to use these additional items. So managing the adjusted gross income and reducing it can be a substantial opportunity. And what we do with our products, life insurance and annuities, one of their primary tax benefits is tax deferral. Now, tax deferral isn't quite as exciting as tax deductions because you just don't get that immediate punch. But it can immediately affect your deductions and exemptions if they start today, and that's part of what we're talking about today is doing tax planning now, not year-end tax planning, is put it into deferred items that don't create income and don't add to your AGI so you can get these deductions, exemptions, and credits.
Well, that's what I want to do. I want to be able to look at AGI, figure out how it impacts the products we sell, and to see if there's any way we can actually alter the taxes paid. Because, to me, it's all about net spendable income. What am I taking home?
Yeah.
Boy. Well, when we come back, we're going to be talking about all these things all this week to put you in position to talk about the products you want to sell. You're listening to the Business Insurance Zone, the talk show that focuses on insurance in your practice. You can email me at thebiz@brokersalliance.com or call us toll free 1-800-290-7226, extension 147. Ken and I will be right back from a word from Brokers Alliance, our sponsor of the Business Insurance Zone. We'll be right back after the break.
Whether you're a professional planner pursuing a strategic partner or an insurance distributor seeking a national alliance, your business just went into overdrive. Now enter the largest resource of insurance products and services with unparalleled access to a worldwide audience of consumers through the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, who can take your company and launch it into the stratosphere of success. With countermeasures, the most comprehensive carrier intel in the industry, the MASH unit with field triage underwriting and the premium tolerance test, the life insurance financial evaluation, the most rigorous policy review, and Bravo high-definition broadcasting with online social media. Your search just ended.
Welcome back to the Business Insurance Zone. I'm Steve Savant, your host, insurance columnist, financial color commentator, and interviewer extraordinaire. Remember, before moving forward with any of the planning strategies that we talk on the show today, always check in with your CPA, your tax attorney, or your broker-dealer compliance department. You can call us toll-free, 1-800-290-7226, extension 147, for any of your quotes or questions on life insurance, annuities, LTC, DI, and group pension plans. Hey, it's not what I know, it's who I know, and that's why I have Ken Davis, CLU, ChFC, CFP, and CPA on the show, and especially now we're talking about Ken's wheelhouse, taxation, income tax, AMT tax, capital gains. We're going to get into the whole thing all this week. Monday through Friday, this whole week, it's all about tax, and that's why I have Mr. Tax Facts himself, Ken Davis, on the show. Well, Ken, we talked a little bit about it. We're trying to open up our minds and get our hands around AGI because it really matters, and our products really impact this.
Sure they do. Absolutely they do.
And remember, this is a CPA saying this. This is just Steve, your trusted wholesale, insurance columnist saying this. This is Ken and I have both been teaching. We've both taught at the CPA Society here in Arizona. So it's really great to have an advocate, or as I like to call him, my emissary into the fiduciary market.
Well, I think it's just a matter of understanding that there's some very substantial tax benefits with the products that we sell. And I think there's a lot of confusion out there. And of course, CPAs and analytical people tend to look at the costs involved in these products. And clearly there are expenses and commissions and fees and stuff like that. At the same time, over time, those costs can be mitigated by the tax savings. And we just have to be careful not to hype what we sell, to be a little more realistic about it. And when they can see that you are realistic and that it in fact does benefit their clients, they tend to come around and say, well, yeah, okay, now I understand. So.
Well, another thing I want to talk about, when we talk about adjusted gross income, and again, we're talking about the first page of the 1040 as you suggested, and we're giving away AXA's great 1040 overlay. It's excellent, as well as Lincoln Benefits 2012 tax update. It summarizes a lot of things we're talking about today. And of course, I have my own brief that is not very brief. I'm sorry to say. I tried to cover as much as I could, about 100 and something pages long. But Ken, I want to add to our plate of AGI discussion this issue of tax brackets, right? Because there's I hear blended tax brackets. I never really understand what it means. I want to really map out a little bit of definition so we have a reference point for the rest of the week to talk about.
Okay, well, let's just very quickly, here's the 2012 tax brackets. So up to $17,000 for a married couple is 10%, and then $70,000 is 15%, and it keeps jumping to 25, 28, 33, and 35, and that's just the federal. Remember, you need to add in the state. We just roughly add about 5% for Arizona. So that's the tax bracket. Now, there's a misunderstanding by a whole lot of people out in the world that they think, well, gee, once I get to that higher tax bracket, all of the prior income that was at the lower tax bracket is suddenly going to jump up. So if I went from let's say from $70,000, and that was a 15% tax bracket, to $142,000, and by the way, we're talking about taxable income now, that jumps from 15 to 25. Well, we don't go back and look at that first 70,000 and apply 25.
It's not retro.
No, it's not retro. So it is a stair-step type of thing, and that's a really important concept. And so what the term or phrase that we use for that additional income over that threshold is the marginal income tax bracket.
Isn't this the basic argument of the flat taxers, though, that they say everybody should pay? It's not so much the word fair share is being thrown around. I don't even understand what that means, because if I ask anybody on the street, we're just sitting there having a conversation and said, we're all going to put in X amount of money, here's the services we're going to get, and I don't know if anybody would say, well, where's my fair share if I got revenue back? Listen, what if we made money on the General Motors bailout? Are they going to spread that evenly among taxpayers?
No.
See, this is what I'm saying. It's just we get into this thing of equity. What's fair? What's the same? And when we get into this, it's not the same. It's progressive. And that, by the way, I didn't say that for a political statement. It is a progressive tax system.
Well, and certainly it is. And I don't mean to get political with it, but my concern is we live in a democracy and we all vote for candidates and for certain changes. If there's half the population not paying any income taxes and the other half are paying income taxes, guess what? If politicians want to raise tax rates and half the population isn't going to be impacted, they don't care. And so you're kind of rigging the whole vote. And that's one of my biggest concerns, is that they've created this situation of different parts of the U.S. population fighting against each other. It's divisive. It's putting one American against another American. I don't really think our tax code should create that kind of an environment.
Well, when we're looking at these progressive tax, again, it's not retro back when you hit the higher numbers. So when I'm looking at a tax, when they say, what's your tax bracket? I mean, can I use that phrase, Ken? My blended tax bracket, or do you like the word more, the marginal tax bracket?
Well, marginal is just the incremental increase in income is going to be taxed at this higher rate. You can look at a blended rate, but it's not a blended tax bracket per se. It's a blend of various tax brackets that comes up with a blended rate. So you could say, gee, I paid $10,000 on 50 grand last year of taxable income. That's a 20% blended rate on taxable income. But like I said, with the tax code, there's gross income, there's adjustments for business expenses, then we get to adjusted gross income, and then we take exemptions and itemized deductions off to get it taxable. So there's these thresholds of generally gross income, adjusted gross income, and taxable income.
And again, we're still talking ordinary income tax.
We're talking ordinary income
So
tax
far,
as opposed to alternative minimum tax.
Or capital gains.
Or capital gains.
Now, I want to just bring this up again, not to be political, but sometimes the political environment actually is a good teaching tool for us in the economic areas.
Sure.
And again, I'm confused because everybody's making an issue of the Republican presidential, Mr. Romney, based on, he said he made 15%, which most of that wasn't even earned income, right?
I mean, he paid 15%.
He paid 15%, yes.
Right.
Thank you for correcting me on that.
That's all right.
But you know what I'm saying? I mean, and a lot of this has to do with investment. It's not ordinary income tax. It's not W-2 money.
Right, and then you get into a whole, philosophical or political discussion of whether there should be different rates for ordinary income, which is wages, and passive income like dividends and interest and stuff like that. And that's where you get, some disagreement. The theory is that if people are investing the money, that money gets invested into bonds of corporations or stocks of corporations, and of course that capital can then be used by those corporations to build the business and hire more people. And so I'm not going to argue either side of it, but that's the theory of the whole thing. And different people
I guess
disagree about how that.
I don't mind the disagreement so far, and whatever we come to, that's the law is going to be. But what I do disagree with is we're making everything equal, and it's not equal. And so I just wish the press would be much more definitive about clarifying what we're talking about here. And so when we talk about AGI, we are trying to bring some baseline definition today on today's show, so we can talk about all this all week.
Sure.
And we're trying to bring some baseline about brackets. And all of a sudden we're trying to compare the normal working class at W-2 versus capital gain issues, which is what I think Romney's suffering.
Sure.
So I just want to get everything on the table so we're defining it. And one of the shocking things that Ken's going to bring up here, and it bothers me deeply, is we did nothing to change the AMT tax, right, at the end of the year, right? So now all of a sudden it's pushed to this side of the year, and we got people that never should be in the AMT.
Well, let's talk a little bit about that since you brought it up. Alternative minimum tax is what the name suggests. Was some people were complaining that some very wealthy people would hire people like me and attorneys and accountants and folks to help reduce their taxation. And they would look at the Internal Revenue Code and look at certain things, certain benefits that they could capture if they utilized things that Congress put in for people to use. Well, they said, they got a little too greedy, that they were getting too many deductions or credits or exemptions. So they said, to be fair, we wanted to create this thing called alternative minimum tax. So you have your regular tax process, which we all know about, and then they have a separate schedule called alternative minimum tax, and it's a whole different way of computing taxes. And they part of our Steve said we have this document that you can send in for. And in that is something on personal alternative minimum tax, and there's also a business alternative minimum tax that we're not going to go through today. But they take and adjust your income, your taxable income, and you have no deduction for state or local taxes or for miscellaneous itemized deductions. So that gets added back into this new taxable base. And then medical expenses can be deductible for AMT up to only if they exceed 10% of adjusted gross income. There's that word, adjusted gross income. There's a limit right there. And then accelerated depreciation gets tamed down. And then we have things called tax preference items. You know, we all think that.
Yeah, but I understand that, and I get that, having the AMT, so that people that were doing maximizing the benefits of the code, and they're just making sure that they pay a little bit what they're supposed to pay. I kind of get that. What I don't get is how this is leaked down into the middle class.
Oh, yeah.
So this is what I'm griping about.
Yeah, and it's a legitimate gripe, and it's something that commentators are concerned about. For instance, in 2011, we had a married joint surviving spouse had an exemption of the first $74,450. Now, you know, that's a reasonable level. I mean, I wouldn't say these people are rich if they're at 75 grand, but certainly that's not terrible. But now, because Congress, because of sunsetting laws, didn't go back and change it like they have in the past, it now sits in 2012. This is actual law today of a $45,000 exemption. That's almost a $30,000 reduction in the exemption. And I would argue, are you rich if you make more than $45,000? I don't think so.
No.
And so this whole idea of taxing the rich, which this was intended to do, certainly isn't happening under this thing. And they're going to have to do something about it, or we're all going to be.
Well, Ken, here we are again. You can view this show and all our shows, especially on this AMT issue again. You can watch it all in HD 1080p right on our home site at www.brokersalliance.com. Just come on our on-demand section and push the red button. You can also catch us on our social networks on YouTube, Vimeo, LinkedIn, Facebook, and of course, where I tweet, Twitter. I'm Steve Savant. You've been listening to the Business Insurance Zone. That's the buzz on the biz for today. Catch our show tomorrow. That's the Business Insurance Zone.
This has been a Bravo video event of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. Need insurance guidance? Call Brokers Alliance. The Business Insurance Zone, dedicated to financial professionals who use insurance in their practice.